Today's Thursday, March 10th, and it's 3:56 p.m. and the stock market's going to close in about 4 minutes. And what I'm showing here is the weekly time frame for Merck, ticker symbol MRK, which is currently trading at $77.85. And at the weekly time frame, each candlestick reflects a week's worth of trading. And in my assessment earlier this afternoon, I've identified two local support resistance levels: local resistance of $80.40, local support of $71.15. And we can see that price has been ranging pretty much between these two levels as far back as October 2020. It probably goes even further than that, but these are two relevant points that I'm using in assessing this trade that I'm currently in. But before I go any further with that, I just want to show that this is a small business account involving, this was just funded a few days ago. And if I click on cash sweep, this account was funded a little over $1,300 back on March 7th. So about 3 days ago. And if I click on activity and positions, the only position here is Merck, which I'm currently in. And also the thing with a small trading account, see there's the balance is less than $1,500, less than $25,000. So this is under the PDT rule, the pattern day trader. So I'm only limited to 3 day trades per week. And as of right now, the balance is currently about $1,100, not including the funds used to get into the position, which is I'm holding right now. And the other drawback to having a small account, I mean, this is a business account, so that's why the data is delayed. And if I click on that, the stock and option data is delayed by 20 minutes right here. Everything else, the Forex, the futures, it's all real time. But trading, it's delayed 20 minutes. So I'm using another platform. Well, actually, I'm still on Thinkorswim, but I'm also trading in my personal account. So I'm referring to that data, not the data on this small business account. So those are the things I just want to highlight before I go any further with the review of Merck. So now that this has been established, I'll go back into this. So looking at Merck is right now currently between these two levels. And I'm anticipating that price may retest $80.40 sometime within the next 30 days. I'm anticipating at least a 75% move towards the upside, even though the market's been pulling back. Merck has been consolidating, gone sideways for the past month, right? So each candlestick is a week. So these 4 candlesticks represents a month. And for the past month and a half, price has pulled back, but the past 2 weeks, prices seems to be working its way towards the upside, at least forming a flat top around this area over here of $77 or let's just say $78. So if I toggle down to the daily time frame, the $77.90, this white line I've marked up, reflects my entry. Okay, so the stock market's now closed. So this candlestick is closed. So tomorrow there's going to be a new candlestick forming. But we can see here that based on the daily time frame, there appears to be a strong resistance level right here. So there have been multiple attempts to get above it. And for the past few days, price hasn't been able to break above it. However, as the upcoming expiration Friday for option contracts is March 18th, I'm anticipating that price may start ticking towards the upside Even though Merck has an X record date for its dividend payout in April next week, so that might push the price down. So that would be the 30% probability that price would come right back down towards the downside. But in any case, I'm very bullish on this position. Just to go over the specifics, what I did was I picked up option contracts expiring 30 days out. So right here on the option chain, I picked up option contracts expiring April 8th. And right down here, the details involve the $81 strike price. So even though price closed today at $77.87, I'm anticipating a move towards the upside, at least at or above $81 on or before April 8th. And if we look on the right side here, under implied volatility, the market is anticipating a plus or minus move of $4.73. So price could move up $5 up or down within the next 30 days. I'm biased on the long side or bullish side. So I did pick up 3 contracts involving this specific option. All 3 expire in 29 days. My cost basis per contract is $71 per contract, and it closed today at $69 per contract. So the trade is down $6 altogether. But that's the status and the rationale for this trade. If price does break above this $78 resistance level, I'm anticipating that we might see a price running up to test the $80.40. If there's a strong momentum behind it, price might get above $80 and maybe test $81. So that's the rationale for my strike price. But again, it's to be determined. That X dividend date is next week. So I'll definitely have my stop placed right down here just in case price does fail to get above it, and I'll close out the trade at a moderate loss. Hopefully not too much, but that's the action plan, what I have in place right now. So as the trade develops over the next few days, I'll go ahead and pause it, and I'll pick it up when there's a significant move up or down, and I'll be back. Today is Wednesday, March 16th, and it's a little after 1 p.m. Eastern Time, and this is a daily chart for American Airlines Group, ticker symbol AAL. And as of today's trading session, which is shown by this green candlestick, it's currently trading at $16.04. And also, this white horizontal line represents my entry for an option contract involving the April 14th, $17 strike call. So essentially what I'm saying is that relative to where price is, I'm anticipating price to be at or above $17 on or before April 14th, which is the following expiration Friday for option contracts. We have one coming up this Friday, but I'm extending my contract out to the next expiration Friday. And this blue line represents my ITM, or this is when the contracts become profitable. So this is ITM is in the money, ITM. So it's $17 is my strike, and 82 cents represents what it cost me to get into the trade. So 82 cents times 100 is 82, times that by the number of contracts and so on. But in any case, the reason for my entry is that there was a strong push towards the upside following yesterday as well. So for the past day and a half, price has been rising since reaching this low down here, sub $11 or $12. And what I did was looking at this chart at the weekly time frame. Right, so now each candlestick reflects a week's worth of trading. So what we have here is a double top. So we have one top right here, which was on March 15th, during the week of March 15th. And then we have a second top occurring on May 31st. And typically a double top is a bearish signal. And subsequent to the second top forming, we could see that price started fading towards the downside to where it currently is right now. And what I did was using the body, not the top of the wick, but the body of this candlestick that formed the second top, I anchored that for my regression channel. So from this regression channel, this yellow band is proving to be resistance, right? So as price tested, it kept on failing. Here, price pierced above it, but the following week, it just failed to hold and then started falling towards the downside. Here's another test of resistance, resistance, resistance. So each one was a failure. The purple line reflects that this is a valid support level for market structure since price got into this pattern during the week of March 8th. So we can see that as price touched the purple, it does pierce it, but retraced back up above it, right? So here, support, 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 piercing it, and then following by a rebound. Now this white line, from my perspective, is acting as both support and resistance as price was approaching each relevant support and resistance level. So where price is currently at right now for the week, price is at the mid-level. So I'm anticipating that price could potentially continue rising in the following weeks leading into the April 14th expiration date. So that was my rationale for this entry. Of course, price could get rejected here at any time, but tomorrow should be a good sign. If price is able to close above this white line, then that would prove to be a validation to my assessment. Like what happened here, price failed to get above it, failing to get above it. After 4.5 attempts, price finally got back above it. So in the event that price does break above this white horizontal or diagonal line, right, then it would have to contend with this yellow resistance level. So if price does manage to get up to this point, right, that should put it at least to $17. Hopefully at that point, there's a strong momentum behind the move towards the upside and that price could continue even higher. So what I'll do is I'll go ahead and place alarms. So this way, if price does reverse and pulls back, then I'll be able to reassess this setup and then possibly close the trade out and protecting as much principal. So if I click on the trade tab, I do have a position here, right here, under the option chain for April 14th expiration date, which is expiring in 29 days. So here, I did pick the $17 strike price. So essentially this is $1 away or 97 cents from being in the money. I picked up 3 contracts. All 3 contracts expire worthless in 29 days. And each contract was 82 cents or $82, times that by 3, and that's what the cost of the trade was. And right now price is at $80 and the trade is down $6. And I got into this trade a little while ago, about 12:43, maybe 20 minutes ago. So right here on my entry. And right now, if I click on the monitor tab, the small business account has two positions, American Airlines and Merck. We can see that right here. Merck pulled back significantly today, so the value's lost pretty much the entire amount that it had gained since entering this trade. But in any case, this is the overall status. So the trade or the account is down $91 as of the time of this recording. And funds available to trade is $854. So if I open this up here. So again, just to repeat, this account has a balance less than 25,000. So it is under the PDT rule, the pattern day trader rule. So I can't trade more than 3 trades a week because the moment I buy, so when I bought American Airlines, that's one trade. If I sell it today before the market closes, that's 2 trades, right? So then this would drop from 3 to 1. So I've got to be careful with how I enter these positions. So, and yeah, something just to be cautious about. And again, small business account, I am getting partially delayed data because of that. So the stocks and option contracts, the data is delayed 20 minutes. However, the futures market, the Forex, real time, I didn't, this account doesn't have margin approval. So this is just pure, cash, whatever's available in cash is what I'm capable of trading. So that's the status of the trade. I'll go ahead and pause this again, and then I'll pick it up in maybe by the end of the week. So more to follow. So it's been a few days since the last update, and today is Tuesday, March 29th. It's 1:42 p.m. There's approximately another 2.5 hours worth of trading before the market closes today. So I thought I'd just do a quick update. So as you can see here under the equities and equity options window, there's been a few activity since the American Airline review. I've since closed out the American Airlines and I've closed out Merck. So you can see there's 0 positions here. So here's American Airlines, 0 position, and Merck is also a 0 position. So for both days, for both securities, it says that for the American Airlines, the P&L is up 147, and the Merck is down $62 prior to me closing this account out. So I did close out the trades with time remaining. So American Airlines had 16 days remaining, and Merck had another 10 days remaining, but I closed them out nonetheless. Net, both Merck and American Airlines was a profitable trade, equating to about $260 in profit. Now, subsequent to closing these trades out, I did reposition funds into new holdings. One is Bank of America. Here it's Bank of America Corporation, ticker symbol BAC. And I'm anticipating a bearish sentiment over the next few days leading into the April 8th expiration date. So I've targeted a $41 target price for Bank of America, which is as of now currently trading around $43.21. Now I'm saying that this is not the accurate price right now for Bank of America because again, this is a partially delayed data, but it's approximately around $43.26 as of the time of this recording. So just to clarify that. And here I picked up 6 contracts. All 6 expire worthless in 10 days. and my entry price was an average of $22 per contract. And as of the time of this recording, again, it's down about half a penny. So here it says negative $3, but again, because of the delayed data, this isn't as accurate as it's showing. So an end of day would have been more representative, but I thought I'd just do an update now. Now, the other position I'm holding, or new position I'm holding, involves lows. Here I have a bullish sentiment, so I'm anticipating price will be at or above $227.50 on or before April 14th. I only picked up one contract at $209 for the contract. Here, again, because of the delayed data, it's showing a negative $194. So there is a slight drop. And here, even though it's showing $220 as the price of the stock, it's actually more at $219.11 as of the time of this recording. Again, this discrepancy is because of this delayed data for this account. And for both of these positions, Bank of America and Lowe's, I've used $331 for both trades, and the cash balance right now for this account is a little over $1,000. And if I open up this position, overall the account is up $1,750. Now again, this account was funded with a little over $130. I'm sorry, $1,300. So the account is up approximately $400. And the last holding I have for this account involves Microsoft. Here, this is another bullish position where I'm anticipating that price will be at or above $335 on or before April 29th. And I picked up two contracts. Both contracts expire in 31 days. My entry price was about $99 per contract. And as of the time of this recording, price is trading at $214 per contract. And this is the approximate profit for this position of $228. And I bought into this position back on March 21st, so a little over a week ago. So it's good to see that price is trending to the upside. So that's the status of this account. But to quickly recap this position, so this is lows at the daily time frame. So we can see that there was a huge gap up from the day before. So here on March 28th, price closed at $213.78 yesterday, which is right here. And then this morning, price gapped up where it opened at $217. So there was about a $3.50 move during the pre-market session, which was very bullish. So I'm anticipating this trend would continue. That's why I took a bullish position. Now, regarding Bank of America, PAC, here we have a strong push towards the downside. And what stood out was that I was looking at this at the 4-hour time frame, and we can see that price has been ranging inside this gray area right here. So price was pushing up, right? And here there was a consolidation area as well. So we can see that price went sideways, right? So it pushed up convincingly with the strong 4-hour time frame right here. And then here it just hit a ceiling and just started ranging inside this gray zone. And then here we see another or something similar to that happening during this time period right here. Now this area, there is a probability that price could bounce off this bottom range, retest the top at $44.50 and continue higher. But I'm anticipating that the momentum might be running out because this time frame of consolidations just seems to be longer than these two prior consolidation phases. So that's why I'm anticipating a pullback, maybe back down towards this level down here at around $41.50. So that was the thesis for my short position for the put contracts. So as the trades progress, I'll do another update, and we'll pick it up from there. So until then, I'll be back in a few days. So see you.